Home prices in 20 major cities fell more than 2% from a year earlier, and some analysts are saying prices could go even lower. Michelle Meyer, a senior economist at Merrill Lynch Global Research, says there's a backlog of distressed properties and it will spread into the market this year. Ms. Meyer joins us now. Thanks so much. Welcome to Bloomberg's Bottom Line.
Great. Thank you, Mark. Nice to be here.
These numbers that came out today, anything in the data that surprised you?
To be honest, not really. We're seeing a further decline in home prices. If you look at the 20-city monthly composite, it was the 6th consecutive monthly decline, and it left home prices for the year down 2.4%. And if you look at the broader number, the national composite, their home prices are down over 4% on the year. And I think it's reflective of the big imbalance in the market. There's still just too much supply of homes on the market for sale, and there's not enough demand. And as you said in the opening, there's still a lot more of these homes that will enter the market. I think, the delays in the foreclosure process and the end of last year means the backlog of foreclosures to hit the market this year will be even larger.
We also see, as you mentioned, that predicted increase in foreclosures. Banks at this point, then they're going to have to start resuming seizures. And then on top of that, you still have that unemployment rate.
That's right. There's still going to be a glut of these distressed properties onto the market, and demand is picking up, but it's picking up only slowly. And the reason for that is the labor market is still pretty weak, and the unemployment rate is still elevated. Job creation is still pretty feeble. So if we start to see a stronger economic recovery, if jobs start to come back faster, demand will pick up, and it will help clear the supply a little bit more quickly. But at the end of the day, it's just going to take a long time to get through all of this inventory, which means that prices probably will fall further.
Michelle, what cities are we seeing the lowest home prices right now?
It's interesting the split that we're seeing between the different regions. The weakest markets continue to be those that were the biggest speculative hubs. So Phoenix is still very weak. Las Vegas is still very weak. Southern Florida also stands out as seeing further declines in home prices. And what's interesting in those markets, we are seeing some demand pick up, but it's people looking for deep discounts and the lowest bid, which is going to, as the homes transact, we're going to see further declines in home prices in those markets, I believe. And then the other end of the spectrum, you're starting to see some strength in Washington, D.C. Boston is another area where home prices are starting to firm out, and some of Southern California as well. Yeah,
and it's funny because the only state where home prices rose was Washington. What accounts for that?
I think it's just there's demand for homes in that area. There's hiring going on, and there's turnover, and that's what's helping to clear the inventory in that market. There also wasn't as much of a bubble in Washington, D.C., so home prices didn't overshoot income quite as much as they did in areas like Southern Florida, for example. So home prices have already turned to what you would consider fair valuation in D.C., and it seems like we're starting to see a bottoming out.
Michelle, what role does fear and also a lack of confidence play in this? Because we talk a lot about the markets, whether it's the housing market, whether it's the stock market, but that psychology that people don't expect things to turn around so quickly. Is that a significant factor here?
It's crucial, and what's difficult about it is it's very hard to measure, and it's even harder to predict. Confidence turns on a whim, and right now it seems like there's starting to be more confidence in the economic recovery. They're starting to see some more traffic in the housing market, but it's volatile, and if we don't see a continued improvement in the labor market, if you don't see the unemployment rate continue to fall, I'm not sure if that confidence will remain. People want to feel secure about their purchase. No one wants to buy an asset that's going to fall in value.
All right, Michelle Meyer, senior economist, Merrill Lynch Global Research, joining us from here in New York. Michelle, thanks so much. We appreciate it.